Assalamu alaikum. Welcome to Study On. This is Samyaziz Bhatti, and today we are going to discuss the very important concept of financial accounting, which is known as elements of financial accounting. We have heard the terms in finance like cash, liabilities, assets, and notes payable, accounts payable, receivables, expenses, revenues, and a lot more terms than when we start studying accounting. But the understanding of each term and its category is of immense importance. So, you are at the correct place today because this lecture is going to help you out in understanding the basic elements of financial accounting that are the key resource of financial accounting, and they help you to build your knowledge. And also, on behalf of understanding of these elements, financial accountants build financial reports like financial statements like balance sheet, income statement, cash flow statements, statement of retained earnings, capital statement. So, this lecture is all about if you're looking for understanding about the basic concept of elements of financial accounting, how much elements are there and what are their categories and how they are going to be put into the financial accounts. So, this lecture is for you. Without wasting the time, now let's get started. First of all, the definition of financial accounting, I would like to explain you that elements of financial accounting are the building blocks that help you to make the financial statements of any business. So if you know that what are the financial elements, accounting elements, you are good to go for making and preparing financial statements. So, with understanding elements, it is going to help you to put out all the elements, all the accounts in their proper titles. For example, if you know that what are the types of assets, then you will be able to easily create a head of asset and put all the assets of business with different names. For example, cash, notes receivables, advance payments, all those stuffs or supplies or furniture and fixture. So you are going to put them in the asset categories. What would elements understanding will help you? It will help you to understand the financial position of the firms, because once you know which element shows which value, you will be able to read the financial statement correctly. It will also show you that what business owns and what business owes, and it will show you the company's performance through the earnings and losses. It's only with the knowledge of the correct elements. We have basically five elements of the financial accounting, of which the first one is assets, second element liabilities, third equity or capital, fourth revenues, and fifth expenses. These are the five important elements of financial accounting, and financial accounting resides in along these five elements, resides in these five elements. So if you understand about these five elements, your financial accounting is going to be very, very good. Trust me. So many students get confused when they don't know the terms and where to put the correct term. So if you resolve your confusion by understanding these basic concepts, your financial accounting is going to be very good, and this will be the building block of the rest of the finance subjects. For example, financial management, cost accounting, and corporate finance. And you know there are more subjects in business studies, in BBA or in MBA. So this is going to help you out as a basic building block for understanding of the more concepts. So let's go with the first concept of assets. Now, in very, very easy language, assets are the economical resources that are owned and controlled by business with an intention of generating future economic benefits. So we cannot say anything an asset in a business which is owned by me at my home or by you at your home. It is totally a business property, or it's just to be used by the business. It is for business, and that's why we say it as an economical resource. We do not say it is a personal resource. It is economical in nature, economical resource, and that is owned and controlled by the business totally. So first thing, there's a barrier, okay, for considering something as an asset. First thing, it should come in your mind that this belongs to the business, not for you, your personal usage. No, it's not your, then it will be not the business asset. A business asset is owned by the business, and it has an intention. What is the intention? What is the thought? What is the purpose of that asset? That it is going to generate you some future benefits in monetary terms, right? So some assets, you will learn in finance that some assets are not generating the monetary returns, but they are benefiting your future returns. Definitely they are promising that something will benefit you in future. For example, a goodwill is an asset but not generating any monetary returns currently, but yes, it has it has an intention of generating future returns for your business. So assets are any economical resource for your business. Assets are the things, the stuffs that are going to generate a good return for your business. Okay, then they are classified as current or non-current. Okay, there are two categories of assets. The current assets are only those assets that can be sold or converted into cash within 1 year, because they have a very shorter span of life, so they are going to be liquidated in 1 year. For example, you have a cash which is a liquid asset. You have accounts receivable is a type of sales on credit, that you have sold something on credit to your customers, and now the customers are obligated to pay you the amount you have lended them. They will pay you that in the specific time, which is less than 1 year, definitely not for more than 1 year. So the credit sales period is always less than 1 year, otherwise it becomes a kind of a loan. It's a short term loan, and that is why it is called as a current. So if you can sell something and get your cash out of it within 1 year, that is said to be as a current asset. So anything like cash, your treasury bills, notes, bonds, they are all the types of current assets, because you can go to the market, you can sell them, you can get your cash out of it. So that is a short term asset. So any nature of this kind is going to be put in the current assets section. They are also known as a liquid asset. We say them liquid. The word liquid means that they can be easily converted into the cash. The something which is liquid is like fastly converted into the cash. And non-current assets are the one that have benefits beyond 1 year, and they are non-liquid because they take lot of time than the current assets to get converted into the cash. You need to wait for 1 year, more than 1 year, like 2 year, 3 year, 4 year. The life is more than 1 year usually. So that's why we category them as a long term asset. For example, you have assets that you cannot readily sell in the market. If you have bonds at your hand, you can go to the market and you can sell. Anybody can buy bonds from you because bond is very liquid kind of asset. So they create no hindrance, and also there is no loss in the face value. Liquid assets are usually those assets that have no loss in the face value at all. But when you talk about the fixed asset, the non-current assets, for example, you can take the example of a automobile or a car. So when you take the car in the market, it will be not as the same price when you bought it 1 year ago. So there will be the decline in the value of the car, and also you will face some difficulties to arrange a party and make a deal with them. So that's why we call it long term or non current, or we can say them as a fixed asset, because it is going to take a time and it has some sacrifice on its face value. But assets as a current assets are not going to have any compromise on its face value. So two categories we have read till now. Assets have current assets and long term assets. Long term assets are not easily convertible into cash. So now we will talk about the tangible versus intangible assets. Some assets, even though they are, you know, um, generating the economic benefits for the businesses, but they can be tangible or they can be intangible. So tangibles are all those assets that you can see, feel, and touch. So assets that have the physical existence. Okay, all the assets like lands, buildings, machinery, furniture, computer, cash, bonds, they can be touched, they can be seen, they can be taken in the hand, are the tangible assets. They have also the depreciation because they are tangible. Some of the tangible assets which are long term in nature have depreciation on applicable on them due to the decline in their useful life. If you want to learn more about depreciation, you can comment me. Then I can bring you a lecture with the more detailed understanding of depreciation, and I hope that that will clear all of the confusions of depreciation you will have. Anyways, intangible assets are all the assets that you cannot see or you cannot touch, but they are still your assets. They still are beneficial. They are still generating the income for your business. They are still having the impact on your future growth of the business, but they cannot be seen. They do not have any physical existence. For example, patents, trademarks, goodwill, softwares, licenses, brand names, these all things that you can think or imagine, and they do not exist in reality. Patent is just a contract of your technology. So you can have a certificate of patent, but in actual you cannot touch the patent. It's a contract that nobody else can use your technology for this and this year. So it is just to secure your creativity. For example, we have also copyrights. Like copyrights are like you publish something and you do not want anybody to copy it, so you can have it. But it is going to generate the future benefits, but indirectly in nature. It's not directly. So these are all the intangible assets. And yes, just like as we deduct the life, useful life of any physical asset, we deduct the depreciation. So on the intangible assets, we apply amortization, the reduction in the life of useful life of any intangible asset is called the amortization. So that's the difference between the tangible and intangible asset. If we classify the assets, you will see that current assets have cash and cash equivalents. First of all, classification is important because we put something in the order. For example, in terms of the liquidity, the most liquid assets come at the top, and then the low liquid assets come at the bottom, like this. So cash and cash equivalents are like bonds, like treasury bills, like certificate of deposits, like you know any kind of instrument which is having a life less than 30 days or 60 days is cash and cash equivalent. So that is always going to be at the top of the list in the current asset section. Then after that we have the very liquid asset, which is called as the accounts receivable. Then we have inventory. Inventory is something which you have stored in your warehouse for the sales. It is the exclusively put material which is in the form of the finished good, and it is ready to be sold in the market. But again, inventory depends upon the type of the company. If it is merchandising company, then it will be always in the form of finished good or the finished product. But if it is a manufacturing company, then inventory will be in any of the three forms, or maybe in the three forms, like raw material, work in process, and finished good. That depends again, and that is again a separate topic. You need a separate understanding of inventory to understand the nature of the financial elements. Well, till now, we have discussed that in liquidity, cash and cash equivalents, accounts receivable, inventory. Then, after that, we have prepaid expenses. Prepaid expenses are all those expenses that are, that we have paid in advance. For example, we pay the bills in advance. Now, that is our asset, because for coming month, for example, you have paid the rent in advance for your shop. Now that advance is your asset, because it's the cash that is yours and you haven't yet expensed it, but you have paid it in advance. So now when the coming month will come, then it will transform into the expense. But till now it is as treated as a cash. Then comes the short term investments. Anywhere investments, for example, in any other investment that have the long less than 1 year period, is treated as a current asset. Next, we have non current assets, which will include, first of all, in the first top category, will come as a plant, land, and buildings. Any kind of land you have to declare it in the non current assets section, or any kind of building you have in which your business is working, or the plant where your manufacturing is happening. So, that will come first. Then, after that, machinery and equipment. Whatever machinery and equipment you have will be at the second place. Third place will be for vehicles, because they are lesser. Now see, we are coming from high liquid to the less liquid. See, plant and buildings, then machinery and equipment, they take a long time. Then vehicles, non-current assets, furnitures and fixtures, and then intangible assets like patents, trademarks, and goodwill, and long-term investments that are more than 2 years. For example, 10-year bonds, or 20-year maturity bonds, or 60-year maturity bonds. So this kind of investment is asset, but in long term in nature. So this was the detail of assets according to the GAAP, generally accepted accounting principles. And this is how we are going to prepare our any kind of financial statement. So we have to categorize them like this.